And why was Monday good? Wasn't Monday very severe going down? Monday was going up, right?
Here's the interesting thing. As a
As a
trader,
trader,
I
I
just
just
couldn't
couldn't
resist
resist
because
because
the
the
patterns
patterns
are
are
very
very
clear.
clear.
However,
However,
because
because
volume
volume
is
is
so
so
intense,
intense,
it
it
actually makes
actually
it
makes it
easier.
easier.
So when a
So when a
pattern
pattern
comes up
comes up
and
and
the
the
price
price
starts to
starts
move
to
in
move
that
in that
direction,
direction,
you can
you can
actually
actually
take the
take the
risk
risk
because
because
volume will
volume will
drive it.
drive it.
Okay, because there
Even
was
Even
though
though
some.
even
even though they
even
were
though they were
counter
counter
trade,
trade,
they
they
just
just
couldn't get
couldn't get
traction because
traction
they were
because they were
getting
getting
hammered by
hammered
the
by the
volume.
volume.
So you did
So
well on
today,
Monday.
yeah,
Yeah,
yeah.
yeah.
And were you betting that
So
was going up?
no,
No, no.
I was
I was
actually
actually
taking
taking
cycles.
cycles.
No, but I mean, you did well on the upside and the downside, or only on the upside?
Right.
Right.
No,
No,
both
both
sides.
sides.
And that's because volume was good? Then why didn't you
Yeah,
do well on the week before? I would thought volume was very
no,
heavy when it dumped like that.
no,
No,
no.
no,
Volume.
volume.
I'm sorry.
Sorry,
Last week
last
I had
week
a
I had a
great
great
week.
week.
Oh, you did?
Yeah, no,
Yeah,
it was
no, it
rock
was rock
solid
solid.
because
Because
again,
again,
we
we
had
had
intense
intense
volume
volume
driving
driving
price
price
in
in
one
one
direction
direction
for
for
long
long
enough
enough
for
for
someone like
someone
me
like
to
me
get
to get
in,
in,
get
get
out,
out,
and you're
and you're
done.
done.
The
The
trading
trading
systems
systems
were
were
taking
taking
completely
completely
valid
valid
trades,
trades,
but
but
if
if
the
the
volatility
volatility
was
was
too
too
high,
high,
the
the
pullbacks
pullbacks
would
would
flop you
pop you
out
out
before it
before it
actually
actually
went in
went
the
in the
direction
direction
that the
that the
trade
trade
took.
took.
So, for
So, for
example, you
example,
would
you
take
would
a
take a
short.
short.
My
My
system has
system
a
has a
25 tick
25 tick
stop
stop
loss.
loss.
Yes.
It
It
immediately got
immediately
hit,
got hit,
and
and
then
then
it
it
went in
went
the
in the
direction of the
direction of the
trade.
trade.
Because your stop loss is so small, had your stop
So
loss been
small.
larger, you would have gotten filled? Is that a true statement? I don't hear him now. Are you messing with something?
No, I'm not doing anything.
I don't hear you. It's interesting. Can you hear me?
No.
I don't hear you.
Did you do anything?
No. Don't hear him at all.
I don't know. There's some issue maybe with the lines.
I see his mic off. He got off again. Let me take
Let's
his.
discuss between us.
Okay.
Where are we?
I don't
What will
know.
be the next
You
step?
want to try to do? He's on mute. Let me just get him off of mute.
You muted them?
No, can't unmute your guest. Their mic isn't connected. Your mic.
Maybe call him and talk to him.
Yeah.
Keep the phone going.
Yeah, let's keep the phone going. You know his number? He'll call me.
Call X strategy
No.
C.
Oh, you think? No, I'm going to call this 949.
This is the same thing. It's
No.
Let me call him.
Okay, you can see if you can call him. But because he has a couple of numbers.
What are you laughing?
Did you get it?
I have to spell it.
I think he's trying to call us. His mic says it's off.
I'll be calling George. So you talk to him, tell him that it got disconnected. Yes.
It's, It's not going through.
Just wait and leave a message. Jesus sake.
George, can you hear me? George, we're trying to call you on X strategy.
Go.
Yeah. See, it's not going through. It's not going through. He's trying to call you. Why didn't you? It's not going. It's not working.
Hello.
Don't worry. You want me to read down?
It's wrong. Just
Leave it.
more
Let.
damage than.
Why? You want to read down? So you
No,
call.
just put it there so you can go out.
Okay.
I'm going on another phone. So this one,
He's calling you now. Leave it alone.
fine.
He's calling you now.
Fine, it's another phone. Calm
No,
down,
but he's
please.
calling you now. And you'll be interrupting him.
I'm not interrupting anybody.
Okay.
Stop it already,
Okay.
please. Calm down. So we have to decide where are we going.
We're recording. You want to record
You
this?
understand?
Do you want to record this?
Yes.
You're on live. You're live.
Okay, fine. Always yes, always the same thing. Why create constant confusion and commotion and
Okay, he's off.
tragedy? He's off, he's on. You do the same thing over and over again. You don't get the idea, do you? It's just like digging in rock all the time. So let's decide what is
Yeah.
our next step.
Yeah.
You want to start trading, or you want to follow up first the downloads and try to run his algorithm?
Yeah,
or-
try to run this algorithm.
For me, I feel that the problem is with the data, with the day trading, it is so
Here he is.
many challenges. Can you hear him? No, he
No.
disappeared.
Yeah. Just put him on speakerphone and we can
Fine.
talk.
Hello?
Yeah, we lost you.
Yeah.
It's-
Yeah, the sound went out, and then the next thing I knew, my laptop started to freeze up. So I'm just rebooting it and going to try and reconnect.
Okay. What I saw, just so we know, that I saw that the your mic looked like it was muted all of a sudden. I don't know what happened.
Yeah, no, I muted it after I lost the sound. I was muting it and trying to turn it back on. And
Okay.
Come back on.
Okay.
So
Everything's
I was just trying to
experimental.
get it.
So let's just, while you're doing this, let's just talk about where do we go from here.
Yeah, good idea. Well, it feels like you have interest based on what happened at the presentation, so that's really good news. Secondarily, as far as my side of things go, it's time to start actually presenting and talking about what I do and how I do what I do, and so on and so forth. So what I'd like to do, if it's possible with you, is to try and set up a sort of a mini presentation, if you will, a remote one with the class, just to introduce what I'm doing and how I'm doing things. And if that goes well, start thinking about how to put together something that would attract these guys into the fold, if you will, because I've really come across some interesting things that I'd like to get programmed. I just don't have the capability of the work with.
And some of these, by the way, some of these people that came to the seminar were saying that they were interested in working with us, and if we can give them something specific to do, they would like to come to meetings and so on. Also, from in the blockchain center, they asked us to teach for them. So
Okay.
we are planning to teach something, and might as well teach something that is related to what you are doing and benefit you, because we are doing it for free as a service to the community.
Right.
And if we can find and the target audience is developers.
Right.
So we have to figure out what would be useful and maybe proceed accordingly.
Okay. All right. So, based on that, obviously there's two things to be covered here. One is to be able to get some, at least for my part, get some little mini presentations done to see how that goes, so that I can have confidence that we have reliability and connectivity, and the story I'm telling makes sense to attract these individuals to the fold and get them involved, because a lot of the tools are really very useful in my mind, but not on price. Price, although everyone says price is the leading indicator, price is just reacting to what's going on in the background, in my opinion. That's just my opinion, and it's starting to show up in the little bit of coding that I've been able to do in reference to using the statistical analysis on some of the indicators rather than the price itself. And that's beginning to show some interesting results that really help in the confidence of taking trades. So, that's something I'd like to develop further, but the math starts getting very complicated. At least for me. And then to turn it into code on top of that, it really does get fairly hefty. So if I can get people involved in, let's just take something simple, the predictive polynomial that we were looking at that looks forward 1, 2, and 3 periods against, let's say, the stochastic or the anything like that, any indicator that we can get some sort of predictive model against.
The forecast. Right?
Yeah, will really enhance.
I said to start with the polynomial, forecasting the polynomial.
Would really enhance the reliability of taking a given trade based on the trigger. So there's two components to this. The first one is the trigger itself, and then the second one is checking all these other indicators and their prediction about where they're going to be in the next period, if you will, and therefore do you take the trade or not. So that's what I'm working on building, and I've sort of built the basic version of that kind of thing, and it looks pretty promising. So anyway, that's something I would like to be able to get out there and get these guys involved in. I think they'll find it interesting because it's actually pretty exciting to watch. You watch the code hold back when you think it should be taking the trade, and then a trade comes along and it takes it. And it's like, I wouldn't have done that, but the code does do it because it is relying on the prediction of where the indicator is going to be in the next bar or two. So that's very useful. Very, very, very useful. So that's a broad sense.
Yeah, I'm not sure what do you think that we should do.
No, I think there's two steps involved. The first step is that we need to attract these guys into a pool to be interested in working on something like this.
So let's say we have them. Let's say we have 3 or 4 of those people that are interested in it.
Okay, then. All right. Then I have specific rules that I can put out there. They're generic. So they're not, proprietary, if you will. But they can be very useful to me in that they will be provided to a proprietary system. So the first part is you want something to give these guys to do. I have a little list of things that they might find interesting with trying to code, and then they can apply it as they choose, in their world. But I think they'll find it very interesting. So I'd be looking at applying the predictive regression channel as a tool, polynomial, and R squared all being applied to the indicators, not price, different indicators.
Like what indicator?
And, well, like I said, the stochastic, double stochastic, relative strength, average volume.
And price is not good because it's too late, or?
Well, okay, the way I see all of this, and again, my theory may be completely wrong, but the way I see all of this is the large majority of the price movement is based on automated systems that are trading the market.
Okay.
Yes, there are individuals, but the majority of the market, the volume and the money is coming from automated systems,
Okay.
large and small. And they're all using price, and they're predicting what price is going to do. So my concept is, well, let's look beyond that, because in predicting what price is going to do, you're actually also influencing the indicators that follow price. So if the indicators can be predicted upon, if you will, then when your system triggers based on whatever parameters you have, you can look at the indicators, and the indicators say, no, we're going to turn here, or no, it's too weak, there isn't enough, the volume average based on a regression channel, an extrapolated regression channel, if you will, is telling us we're coming to the wrong end of the channel as far as volume goes, so this trade won't hold, it'll collapse. So that's my theory, and I'm trying to test it, and so far it seems to hold water as far as I'm concerned.
Do you want to show me?
I'm trying to...
What is he trying to say?
He's saying he's not using.
Let's see if you understood it also.
Okay. What I understand, and correct me, and what I understand is he says that because there's all the automated trading systems,
Yes.
price is not, he doesn't think price is good for the polynomial, but rather other,
Predicting the price
Yeah,
is not good.
right,
What
right.
does it mean that it's not good for the polynomial?
that it's not good as a predictor, or it's not good as a dependent variable, or it's not good as an independent variable?
The problem with you, in my opinion, the problem with using price as a predictor is every single trading agent out there is doing that. So that in itself is creating a distortion, if you will, within price movement. Meaning that because every agent is using some sort of mathematical model to predict price, they're moving price in that directional counter to it, depending on which way those systems are going. The indicators are giving me, if you will, a strength indicator, meaning that if I have a trigger based on whatever parameters I set, which will be based on price, by the way, if the indicators predicted component, which would be using the polynomial on one of the indicators or the extended regression channel, are telling me we're at the wrong end of the channel for the indicator, then I would nullify the trade and say, no, don't take it, because this is not a strong position to take this trade, even though on the chart, and the prediction on the chart says you should. So I'm seeing that as a good model to work with, because what I'm trying to do is get away from the crowd. The crowd is, how can I put this, getting price movement to be out of focus. So, it goes up, then it comes straight down, then it goes up, then it comes straight down, then it goes down, then it goes straight up. There's no, it appears random this time. Because, again, if you apply the mathematical and statistical model indicators, you can start seeing a pattern in those that tell you if your trade will be good this time or not. The best example of that is when we have where we're not really going anywhere, we're going up and down and up and down up, and the those is going to break out. And the one that breaks out is where the, let's say you use the extended regression channel on, I'm just picking on the double stochastic, and the double stochastic happens to end up being at the right end of the extended regression channel or cycle, because the indicator is cycle, whereas price is moves. Then you have high probability that move is going to work for your trade, so go ahead and take it. If the double stochastic is at the wrong end of the regression channel, meaning that it's showing that the double stochastic is going to reverse here, then you shouldn't be taking that trade because the probability is very high that the trade the price is in a cycle. It's not really going to keep going past the bottom or the top or whatever the chop down there, the chain cycle jump. Does that make any sense? Something like
So he's basically saying, is this like one of your indicators would be your dependent variable or what? I'm not sure what.
Okay, all right. Let's go back to basics here. Let's say we're using the simple moving average crossover, which you have.
Okay, the SMA crossover. Okay.
Okay, so you have the SMA and it crosses over.
Okay.
Now, you go and look at the double stochastic and the stochastic, and you see that they're at extremes. And depending on which extreme they're at, they're telling you that we're oversold or overbought.
Okay.
So when you get that crossover, if you're trying to go long, let's say, and the double stochastic is in the overbought section, then the probability is that you're going to get a little bit of a reversal here before we actually even attempt to go in the direction of the cross.
Now, wasn't George, you remember when you first started, I said, let's just do when we first started this plan, I said, let's do just a simple SMA crossover, and let's add, for instance, the R square between certain values. You remember we did that?
Yeah.
And what I understood, and you did that, I don't remember, what did you use? You used, at that time, I don't even remember what you used. You used the R square and, what was it? I forgot which one you used. But you used those R square and the other ones, and then you said there was an issue there because one, it would hardly then trade because it was waiting for the AM. Or what was the issue there? Wasn't that similar to what you're talking about now? What's the difference? What we had given before as the algorithm that you would add, for instance, those additional factors, and then you would institute the trade.
Right, and I guess okay.
So what's the difference between what you had done then versus what you're proposing now? That's what I don't understand. Isn't that what you did before?
No.
What did you do before? Tell me what you did before then. And what's the difference?
What we did before was you were educating me on R squared.
Right.
And I was taking the parameters that you were giving, and you were saying when it's over 0.2, or I don't remember the number,
Yeah, whatever it is, that value's right.
Yeah. Okay, then it's a good sign, and we're starting to move in the right direction. So that I was experimenting with the parameters that you were giving me.
Yes.
As is. Now, what I'm saying is if you take the predictive regression channel or the polynomial,
Yes.
and apply it to R squared.
Yes.
Not price, but R squared.
Not what? Not price, but R squared, yes.
So when your simple SMA crossover and the prediction on R squared based on the extended regression channel on the polynomial, means that it's going to move up, from 0.2 to 0.3, that's the one, because it's predicting 1 bar ahead.
Yeah.
Then that then that should strengthen validity to you taking the crossover.
Okay.
That's the difference. I'm talking about applying this analysis, in this case, to R squared, or any other indicator.
Weren't we doing it before?
I'm not sure exactly what does he want. I'm sorry, I don't understand.
Okay, so all right, let me put it in.
Maybe did you have something?
Let me explain to you what it is. Right now there are two variables. Let's say there is an x and a y. The x is the Julian date, which is the horizontal axis, explaining it in a graphical term, and the y is the vertical axis, which can displays a currency such as dollar, for example, or something like that, or foreign currency. So that vertical axis, the y, is called the dependent variable or the predicted variable, and the x is the predictor variable. In other words, you give it 5 periods into the future, and it will return to you the predicted value of the price 5 periods from now. So if it is daily, it will be 5 days from now. So if today is a Tuesday,
Right.
then Tuesday plus 5 is what it will predict. What you are telling me that you want to change the variable that is predicted, or the variable that is the predictor, or both?
Okay. We're talking two slightly different things, because you're looking at price movement only on that chart, meaning, you know, the price and the date or time. What I'm saying,
That is what we are doing with Ninja Trader. That's right. We are looking at the date, and that date predicts the price.
Now, what do you want to put on this axis?
How do you want to modify it?
no. What I'm saying is that on that chart, you can also plot R squared.
Right.
That's right.
Right.
So the R square is a function of time also.
Yes, exactly. So, if it's a function of time and it has a value in scale, we know it's a limited scale because it doesn't, go to the moon.
It's a limited scale. What is it?
Limited scale. It's limited.
Yeah, the scale is
well,
from 0 to 100, and it never reaches 0, and it never reaches 100, but it approaches it.
Right. So now you have one chart that is your price movement based on value, date, and time. You have a second chart that is plotting R squared, and it's using R squared within R squared parameters, if you will. What I'm saying is to apply the predictive model to R squared.
So what would you like to predict, for example? The movement of R square?
Yes, is R squared in the next bar forward, the predictive model, going to continue up, or is R squared going to regress? That's
Whether it will rise or fall.
correct.
Right, so there is a function in C, there are functions in C and also in C sharp, in an Excel, to tell you the slope of a variable. So in C it is the function is called rising or falling.
in rising or falling, it's in Ninja Trader.
In Ninja Trader, it is in C and C sharp. So there is a function that is called rising or falling, and you can enter any variable such as the correlation, and it will tell you whether it is rising or falling. So
It was or it will.
It is. That's all
it
tells
is.
you.
That is what I was telling you. Theoretically, you should go into the R square when it is low and
then-
ride it. Think about it like waves. You know, when you are catching waves, I used to surf. we were standing there far in the sea, and we were catching the wave just when they started, and we were trying to swim with them. And then when they broke, when we were in the right position, they would take us all the way to the beachfront.
Right. Right. No, I fully understand all of that.
Okay.
But the rising and falling
Yes.
is the here and now.
So he wants it as a forecast. So if it's at
Forecast.
0.3,
Oh, I see.
what is going to be the future, rather than what the price is? Am I correct, George?
Correct.
Rather than what is
Correct.
tomorrow's price or the next tick's price, what is the next R square? And if I know that, he's saying, let me just get this right.
Okay.
He's saying that everybody's doing the price. So he's going to be late to the game. So he wants to try to do something else rather than forecast price, because all the bots are doing price. He's
Right.
not going to be able to
Right,
compete. Am
right,
I correct?
right.
That he's not going to be able to compete
Yes. Now I
successfully
understand how-
on the bot.
Now I understand,
we both
what you
didn't
said
understand.
before many times.
And
You
we-
have to do something unique that nobody is doing.
Right, that if I'm just going with the bots, he'll never succeed. The bots will, the other bots from Goldman or whoever will always be better.
Right.
Would
and
be
that
always
is-
be faster.
Second part.
And that is what I was trying. I did it in the past because I was thinking that that is important, especially for people that don't have the fastest, closest computer and don't have like a supercomputer there,
Right,
like the big trading company sitting on the exchange and get priority services of all kinds.
or
and
they do the filling themselves, so they fill
have
themselves
inside
first.
information and all kinds of other advantages over
They're
the small remote trader.
Right. So that's just our square.
No, but he's thinking about, okay.
Yes.
That's just our square. But there are multiple indicators that I use to confirm whether a trade should be taken or not. If I could have some of these statistical tools telling me, look, 1 bar from now, this is going to continue happening or it's not, then I can have confidence in the directionality and statistical probability that my trade is going to work out. Because I'm working in such a high frequency environment, you get to see that over and over and over and over again. Whereas if you're doing it on a daily or something like that, that's even better. That's even better.
No, because you have time, and then you can get in.
Yeah, that is another issue also about the frequency of trading.
Right,
It is a huge challenge to deal with tick level data
right.
because
You lose some of that data.
you have to download it and then you get overwhelmed by the amount of data, and it's not available from a teaching standpoint. It's very easy to install NinjaTrader, get the dailies and backtest it, and then
Forecast.
even do forecast on a daily basis, and then open a brokerage account and so on.
And even recheck it with
And even
Excel.
if you miss a couple of ticks, and if you buy it a few minutes later, it is not so crucial.
And you can compete.
The point about what I'm trying to say here is if you can get this to work in the environment that I'm in, you can make it work up from there,
Yes.
Yeah, no,
because
if it
it
can
is
work
much
there,
more
it'll
challenging. That's
it'll work
right.
anywhere,
Yes.
of course. But the idea is to get that to work, you have so many other extraneous variables that even if you had the perfect model,
Those are the tools that I want to build. Those are the tools that I'm trying to build. Those are the tools that these individuals could help. So
So-
those would just be literally utilities of working with the indicator. Having some sort of predictive models for the indicator.
so the indicator will be a variance rather than.
So you want to know in advance where is this R square going?
Not where it is,
before
not that it
happens,
is, not as is, will
Because-
be.
Right.
Because if you get it currently, by the time you take any action,
It's
it
past.
completely reverses because it moves so rapidly.
Correct.
And that way you can get the sweet spot where it is rising.
And will be rising, and will continue to rise.
Yeah, the
Or-
important thing is to understand what it is. it is an indicator that tells you that there is some kind of a consensus in the marketplace where the herd is moving.
Right.
So, for example,
That's the whole goal here.
for example, when this virus when they started hyping it in the news with the virus, this Monday between 7 and 9, the market was crashing.
Right.
But if you looked at the R square on these minutes, and you predicted the R square, the R square will rise because there was a consensus that everybody is dumping.
Correct.
Anytime there is a rise in the consensus, the R square goes up. It doesn't matter if the consensus is buying or selling.
Correct. Right. And that's what I'm looking for. I'm looking for confirmation when one of my trades triggered, that all the background indicators are also saying this is going to continue, because that's what we're looking for. We're looking for continuation, even if it's for 3 minutes or 5 minutes in my case. That's all it is. I need this to continue 3 to 5 minutes in the direction that I'm taking the trade. And the predictive capability of the statistical analysis applied to these indicators should be a powerful tool. That's my theory. I don't.
Yes, it is also it is very data dependent. So, for example, if it's S&P 500 futures or S&P 500 or S&P, what exactly, it has to be specifically tested on the instrument that you are using. And I'm not sure exactly what instrument you are using, and so I have to basically replicate your setup and then understand fully what is the data and test it. It has to be valid because it depends on all kinds of distributional issues, like I explained to you before. For example, the skewness and the kurtosis of the distribution determines whether it is violating the assumptions that underlie the forecasting model. And the departure from the assumption requires all kind of adjustments. And if the assumptions are met, then you don't need to make those adjustments. And those adjustments are quite complicated. So, for example, let me give you some examples. For example, some of those distributions are supposed to be normal.
And they're not.
And they are not normal, they're skewed, which is okay as long as you can calculate the skewness and adjust for it. So normal means that it looks like a bell-shaped curve instead of being tilted to the left or to the right. Furthermore, it assumes a certain kurtosis, meaning that it is like a bell-shaped curve that is not too tall and thin and is not too short and flat.
Right.
And which is fine if it is not, but if it is not, then you have to measure the kurtosis and adjust accordingly, and then it will be much more meaningful. Otherwise, the results that you are getting would not be as reliable. In other words, it will appear like 99%, like those profit that you have in the simulation that turn to a loss when you run it.
Right, exactly. And this was my issue with Tony.
Yes, and it became apparent when we were trying to present his algorithm, it became apparent that those are the issues that he has, that it is always 10% off the mark. And he is basically missing this 10%, and I was trying to tell him you need to make some adjustment to your model, but his model is so complicated. By the time we are done with the data and trying to get it to work, of course it didn't work off of a USB like you predicted correctly. We were not even close to that, and we couldn't, because of the circumstances in there, we couldn't even put the PowerPoints of the guest speakers, so they were just talking out of their head because we had so many network problems and connection problems and HDMI problems and you name it. But I think that
And, you know, that's the real world.
right.
Okay, so my thought here is that there's two different, in my mind, there's two different things going on. One is I need to be able to make some presentation, get my presentation, you know, kind of going and smoother and make more sense. So I'd like to talk about, you know, or at least put on the table making a presentation to the class, give some parameters, and you know, I can do that. So we can get this working. And then the other thing, once we know this part working, the presentation component, I can do some presentations for the people that might be interested in helping to develop some of these tools.
Yes, I can tell you, when I presented to them the regression models, the polynomial, first of all, the linear extended into the future,
You want me to show you that?
and also the polynomial, and Sarah can show you the slides.
Let me show you the
What
slide.
was the most interesting is the reaction of the audience. So the audience said that they started asking me the same question that I just explained to you. They said, I'm not sure what are you predicting and how are you predicting it? When I showed it to them, can you see her screen?
Hold on.
She's trying to share her screen.
Do you
So
see
this is
it?
the slides from the presentation.
Right.
So what you see inside, what you see is a forecast. You see the black and white lines inside the polynomial chart.
I do.
These are the historical data that stop at a certain point when after it turns purple. At that point, you can see that at the very edge, the linear points up and the polynomial points down.
Correct.
Now, I was explaining it to them and they didn't fully understand it. So then I went and I showed it to them in Excel. Let me see if I can show you this. I did the same thing in Excel and in... so here is an example of Excel doing the same thing. Just leave the mouse alone for a second, or maybe you can point at what.
That's what I'm saying.
You see in the Excel, you see the historical data is in blue. Can you see that?
Yes, I can.
Okay, and then you have the linear function that is also blue
Dotted blue.
and extends. So tell me which direction is the linear function going, up, down, or flat?
Sometimes you
Be
can.
quiet. Let me see if I come through. What did you say?
Linear looks flat to me from what I can see.
But
No,
let him
look
go to
at this,
YouTube on the
another-
dotted line,
another-
not the. See, he's looking
You see
at
this? No, you see
the
this
dotted blue line.
extension on the right-hand side.
Okay, I barely.
Yeah.
Okay,
You know what?
another thing. Be quiet for a
Tell him
second.
to
Another
go
thing
to YouTube, and he can see.
doesn't
better.
matter. YouTube schmoot to be.
Okay.
Another thing that is important, you look at the coefficient of the function. How do you know if it is up, down, or flat when you look at the value of the coefficient, George?
I'm so
Be
smart.
I
quiet.
have no idea. I can barely see
You can
anything.
So
barely see.
repeat it for him, my question, just verbatim. Don't add and don't.
No, but he can't see it on.
It doesn't
here,
matter. It
look at
doesn't
that.
need to see.
No,
What
but
can I do?
you're asking what's the number of the coefficient. You don't see it. You see it on there. You don't.
You know,
see
there
it.
isn't a formula of this format, George. Y is equal to AX plus B.
Okay.
Can you follow me so far?
Yes, I can.
Okay, so what is the slope in this function? Is it Y, X, A, or B?
I would say it's X.
Is what you
He
said?
says X.
No, X is the predictor variable.
Y
Before
is equal
X, be
A
quiet.
time.
It
Repeat it
is
again.
Y equals A, like ABC, X plus B.
I don't know.
Can you understand me?
No, you can't. Let me put a notepad in.
So go to the next slide. I have the formula in large
So
letters.
what are we trying to, I understand what you're saying, but obviously,
The same thing that people in the seminar asked me, okay? So I made a slide that shows it. Just a second. Let me see if I can find it now. You know, when you're trying to find something, you cannot
No,
find
it's
anything.
not that. It's
Right.
it's going on.
Okay, we'll find it just in a second.
There it
Okay,
was.
here it is. Okay. So, okay, can you see this slide?
Yeah, I can, yeah.
Oh,
Okay, you see that y equals -1.
Yeah.
So that tells you what is this what do you think this -1.666 is?
I'm guessing it's the slope.
That's right.
Yeah, right here. Right.
Exactly. So when that line is negative, what does it mean about the slope? Up, down, or no, or flat?
It's negative, it's going down.
That's right. Exactly. So this is an example where the linear and the polynomial agree. You can see the red line in the background. That is the polynomial,
Yes.
and when you look at it, what direction is it? The right tail is the forecast, and the left side is the historical.
Correct.
So which
So
way?
it's going straight down.
That's right. Exactly. So that is what I was trying to tell them, because they were asking exactly the same questions that you are asking. So I told them, look, sometimes they are in sync and sometimes they go the opposite way. And I showed them an example where they were in sync. I think it was with RCL, which is the cruise line that got hit because they had this petri dish of a cruise that was infecting everybody.
Yeah, and then sending them home.
And they couldn't land, so those that couldn't come out, they kept infecting each other.
Peachy does.
Right.
And the press covered it extensively, and everybody was dumping those cruise liners. So both the linear and the polynomial were hitting down, and I was explaining it to them. Then I told them, look, even at this situation, what is the difference between the R squares? Can you see the R square of the linear is 70%, 0.7.
Yeah, and the other one is 0.99.
That's right. So there is a huge gap. This is a 20% gap. So they were asking me when they are all moving in the same direction, there is no problem, and you can see even then there is a huge gap. But when they are going opposite ways, how should you decide? How should the algorithm decide? And based on the one that has the higher R square. So
Right.
this is what I was thinking, that will be very important if we can predict it and include it in the equation, so you will have kind of a head start about it, and you'll be able to forecast it a little bit ahead of time, and base the trade also on the forecast and not only what is happening now or what happened in the past.
Right. I wanted to take it a step further, though. I want to go to the prediction of R squared in those two scenarios using the forecasting model for R squared itself, not just R squared as it appears in the curves and bends and twists of price.
I understand. So you want you want to know what will be the R square several periods before it happens.
Just one will do.
What did you say?
Just one will do, not even
Yeah,
several
one.
pairs.
You start with one and then you can add another one,
Right.
because sometimes you have such a big delay by the time your algorithm can take the action, it loses a couple of ticks.
See, that's the
Right.
problem with the R squared. But how is this R squared? If you're losing on the price, you think that won't you have the same issue with the R square? That it will be
yes.
you're thinking R square is prior to price. Is that what you're thinking? You know.
Yes, yes,
Or
this
you
is
think you think it's a leading
this is exactly what your friend told you.
Yeah.
Why can you not take it a little bit faster? You know, you said that your friend that was trading with your algorithm.
Yeah.
He said if you just take it a little faster, you will make so much more.
The difference is, as far as actual trade performance, is that if your confidence level is higher when the trigger manifests itself, meaning that you're predicting that R squared is, let's say in this case, is going to start descending, then you, as an example, then your confidence is the key. So that's the abstract part. So you will go ahead and tell the automated trading system, go ahead and take the trade because the prediction is that R squared is going to be reversing here, as an example. But that kind of nullifies the time and slippage factor. That's the purpose of the prediction. Is it's giving you the confidence, giving the system the confidence to take the trade because the directionality is appropriate for that trade. Where it predicted R squared in this case is telling you that R squared is going the other way or sort of going the other way, and therefore do not take this trigger because it will fail. The prediction is that R squared is going to continue in its current direction, whatever that is. So that kind of negates to some degree the failure and the taking the trade too late, so on and so forth. You're getting slightly ahead of that scenario. At least that's my theory. I have to prove it.
Yeah, we can test. It is easy enough to test, but you have to test it. And if it works on one instrument, it may not work on another one. We have to test it specifically for the instrument of interest.
Correct. And I think that's where this gets really interesting, because I personally believe, and I built my system this way, that each market has its own behavior pattern. The participants aren't the same, the product isn't the same, so therefore the behavior is different. So just because, let's say, this tool works for the Russell 2000 or whatever, futures, that doesn't mean it'll work for the Dow futures.
Not only that, even for the time zones, it is different. For example, 7 to 9, we were analyzing in the discussion, there's something came up, what time zones are there? So the time zone from 7 to 9, is where all the action was taken, the big drop. Immediately, the drop started in Europe, and then before the open in the US, already the market started collapsing, and then it gapped down at the open, and then by 10 or 11 o'clock, the majority of the drop expired. So there are cycles, not even the seasonality of the entire year, seasonality and cyclical behavior during the day or night.
Yeah.
This is why it is so important that you market dark during the night and the opposite during the day, because there are cycles within these periods that are very important, and I think that they explain also why at a certain cycle you do well, and then if you continue it is reversing itself, and that is what you said that people were telling you, we were trying to continue and we lost all the money that we made.
Right, and unfortunately this is something that the people who attempt to trade do not understand. Even if you do it manually, you're going to have the same problem. So it takes years to figure out that there are time cycles within the time cycle. And there are trading zones and there are non-trading zones, so on and so on. So those are all the add-ons to your skill set as you work. So yes, I agree. And the first step in my project here is to see if we can apply some of these predictive statistical analysis tools to some of the indicators that are used. Now, what you do with that is up to you. I think that can be developed in the open. I don't think that needs to be something that people thing to do, because you still have to apply trading skills, you still have to apply time cycles, you still have to apply all kinds of things once this is created. So that's what I'd like to propose that we try and get these fellows to help us with.
Yes, this is this guy that I told you about, and I showed it. I think I prepared it also in the slides.
Right?
That he has this stockspotter.com.
Yeah.
Stock spotter. Yeah.
He spent a lifetime analyzing these cycles,
Right.
and he shows he has written several dozen articles, including in traders.com, in which he demonstrates those cycles and the distributions and all the points that I made to you, that when you look at those distributions and their characteristics, you can tell which cycle is the current cycle.
Right. Right. Yes. No. You mentioned that, and that's very, very interesting.
And yeah, apparently he's very successful in the way that he has a lot of subscribers, and he's been doing it for a very long time.
Right. I can understand that, and it's great. But I like my auto trader. I like the idea of letting the computer do the work.
No, this is what he does.
Sure.
This is the whole point that he is making, but this is a whole field of study that is called digital signal processing. In fact, there are specific CPUs that are strictly designed for that, because certain things in physics behave in a certain way, like vision, for example. All those vision chips that we have now in my brother's company, for example, in Mobileye, the camera that is looking at the road to predict the road is also using a DSP. It's a DSP chip that is specializing, and that's what my brother, his entire professional life, when he came out of electrical engineering, he started working on DSP chips and the hardware, and they have people that deal only with the hardware, and they spend their lifetime just digging into that. Then they have another team that deals only with the software and only with DSP and vision algorithms. So, and that guy that is, I was telling you, with the stocks as spotter, he was a rocket scientist that also specialized for missiles or all kinds of other trajectories like that to calculate those DSP algorithms.
Cool stuff. Wow. Okay. So, do we have an idea, a consensus, a plan?
Yes, so I will try to work on it a little, and I will have something done by next time. In the meantime, I would like to ask you what I really don't understand well what you are doing. I mean, I need a great depth of understanding in order to figure out what I'm doing. So I don't know what I can do or what we can do so that now I got a more specific picture of what it is that you think, for example, we could do, like with the forecasting of the R square, which I experimented with in the past.
Okay.
But I didn't realize that that is what you were looking for. So
yes. And I'm only looking for that since you introduced me to the R square, by the way, and the regression channel, and this was a new tool for the toolbox. And I found that its application is quite interesting, but not efficient. At least for the models that I use, which is a much faster trading environment, if you will.
yes,
So what I did is I started thinking about the idea that most of the market participants are automated trading.
yes, they say that more than 70%.
Right. So that being the case, that means that you're competing against other automated trading systems. And what are they all predominantly looking at? They're looking at price, and they're looking at price pattern. And yes,
Price and price pattern.
and yes, they're looking at volume and this and that and the other, but they're not. Most of them are not applying any analysis above and beyond just plotting it on the chart and then just saying volume needs to be higher than this or lower than that. We think there's support here, so
Not only
something
that,
is
but
wrong.
most of them just take the linear function, even though many times the linear function is completely off, as I was demonstrating to you. They don't bother with anything nonlinear.
Right. So my thought was, you know what? We could apply some of the advanced statistical analysis to the actual indicator to give us confidence that when a trigger goes off, like the simple SMA crossover, okay, so let's call that a trigger. Let's say it's triggered. Now, where is R squared as a prediction for the next R?
Yes.
Do I take this long? Do I not take this long? That's what I want to build. My system have triggered, and now I'm trying to use the statistical analysis on the indicators to give me the confidence to either let the trigger go or to stop it.
Yeah, there is a special analysis for that is called discriminant analysis.
Right.
What the discriminant analysis is doing, it separates the text or any observation to two classes. One, for example, that is one that is males or one that is females. It was used a lot. We have published a lot of papers
These are
about
for
it
bankruptcies too.
for predicting loans. So when you apply for a
Are
loan,
you going to be able to pay it back? What's the probability?
what is your probability of default? And they go through hundreds of variables and tell you the probability of default, and so you can select only those that are acceptable risk and discard the rest of them.
Right. So that's what I'd like to do. I mean, that's what I want to build. I'd like to build a tool that can be applied, and then you apply them based on your model, whatever they are. I think.
Another important thing is a confidence builder. For somebody to start even trading your algorithm, they have to have enough confidence in him that if it has the appearance of scientific rationale, let's say, people believe in it a lot more than otherwise.
Correct. And I'm all for that. So, I mean, I spent half a lifetime trying to do that. So, yeah. I'm all for that. Okay, so what are our next steps here?
So you work on that. Maybe what we should do though is there a use for us to run your system, George?
Sure.
And try, you understand how
Yes.
you want to do that, or you want to work on this part instead?
They are not mutually exclusive,
No, but-
except that it will take some
The
time
you know what I'm saying?
to emulate what you are doing there, which I understand vaguely, I think, what it is, but there is the devil is in the details.
Absolutely.
So if I replicated your setup, I will be able to tell a lot more than now. I think so, but it is an experiment.
No, I understand. So basically, the version 2 that I sent you will work with all the data that I also sent you. And what I do need to do is, I think I already set it up for you by TeamViewer, but I don't remember now.
I don't remember now. We'll have another session on that.
Yeah.
You know what I mean?
Okay.
So let's see if you can decide what it is, and let's focus on
What
one
do you
thing.
mean?
What it is that I know that you are trading the S&P 500 futures.
Is that it?
No,
No,
NASDAQ.
NASDAQ Mini. NASDAQ Mini?
Okay, whatever it is, you see that how confused I am. So,
You're thinking
Yeah,
of,
yeah.
you know what, you're thinking of Tony too. So that's why.
because we are dealing with so many different people, I got mixed up with Tony, right?
You need a database.
Right.
So you're doing NASDAQ what? Mini?
No, just the NASDAQ regular contract futures.
Okay, NASDAQ. So that's what you
Let me put a note.
And all the data that I sent you is almost 2 years worth of data for that market.
One second, write some notes. You can sit here. Can you swap with me and can you go over there so I can write some notes? So I got an idea what it is that he is doing.
Because we start thinking about so many different things, you know?
Sure. Can you send me that presentation?
Yeah, sure.
Yeah, they're going to publish it too.
Yeah, I'll send you the presentation.
Yes.
But I'll send it to you. Good idea. I'll just send it to
So-
you today.
Okay.
So NASDAQ
Yeah.
futures, NASDAQ mini,
No.
no,
It's the symbol is just NQ and then the month and then the year. So the
Oh, NQ, okay.
Do you remember the NQ?
Yeah, NQ, right.
Like whatever, 3-20 or something.
but and the NQ is NASDAQ. What is it in words? So when I do a literature search on it and stuff like that, besides NQ,
Just the NASDAQ futures.
NASDAQ futures.
okay,
It'll come up. And that contract's about to roll over, second Thursday of this month, it'll roll over to the June contract.
So when you type in NASDAQ futures, it always comes up with the word before,
Mini.
E-mini.
right.
Okay, then just use that.
Yeah, the NQ, it always says, just so you know, George, that's why I was thinking about the E-mini. When you type in NQ, capital NQ,
Yeah.
all caps is the E-mini NASDAQ 100 futures.
Okay, that's what I found also. So I
Yeah.
got a little
All right.
confused.
Yeah,
Every time I do that, it
You know
comes
why?
up.
Because I haven't actually looked at it in years.
yeah, see, it always calls
E-mini
me
NASDAQ
everything
100
right,
futures.
Right, and that's the NQ.
CME group,
Yeah, and it says
AME group,
NQ,
correct.
and it's NQ.
NQ, that's right.
Is the symbol.
Okay. Yeah.
And then there's the E-mini S&P 500 too.
Yeah, I'm actually developing a product for that. I'm also developing a product for oil futures. But they're completely different. Their behavior pattern is different.
Yeah, I'm sure. No, it's better that you stick with one.
What
in
is the other one that you said?
S&P, and what's the third one?
CL, oil futures.
Oil futures.
Okay.
The oil futures. And
So
what's the symbol of
S&P,
that?
S&P 500
E-mini.
E-mini also it comes up.
Yeah.
Yes.
And the oil is what symbol?
CL.
CL.
C is in Charlie, L is in Lima.
Yeah, okay. So that is oil futures, the CL?
Yes, that's correct.
Crude oil futures.
Yep.
Witty.
Also the CME group, you can see that.
Yeah, CL. Witty crude oil. West Texas something.
Yeah, West Texas sweet, I thought it is.
Right. Okay. What is the symbol for the S&P 500? Can you recall from the top?
ES. E as in echo, S
Oh,
as in
ES.
Sierra.
Okay.
ES.
Yes. Okay.
Without causing widespread social disruption.
So there's a difference between the E-mini S&P 500 as it E-mini S&P 500 ES stock quotes, historical news, and so on Yahoo and the CME group.
The data feed is provided by the CME group, Chicago Mercantile Exchange. So it's their servers that are connected to trade those.
And when you look at it in Yahoo, they give you historical data.
Right.
Let me see what it is there. S&P 500. Trying to find the historical quote for the S&P 500 from Yahoo. Get some all kinds of stuff in.
What are you trying to find now?
S&P 500.
The minis or what?
Yes. S&P 500.
Yeah, it's gone south already. It was green most of this morning. Now it's starting to drift down. If that's the right term, I don't even know if I'm drifting down.
E-mini S&P 500 futures quotes.
You see here?
And specify historically.
Look at this chart.
Wow.
Look at that.
Can you see that? Find the historical quotes, the numbers.
Yeah, that's it.
They come up with 20 symbols.
Yeah, because there are so many institutions that invest in the S&P 500 in different ways that they've come up with different flavors of the S&P 500. Flavors.
Do historical quotes.
Maybe I see it here on the line.
Let's try to find out exactly, find some example that is in the ballpark. Java on Google and get Java instead. New group. Bar chart, futures, historical.
So do you need me for this part?
No, no.
No, I was just wanted to make sure that we are on the same.
We know now what are the tools here.
Yes.
Okay, George. So we'll everybody. So what is your plan for next week? So we know our homework assignment. We'll work on. You want to work on the regression then?
Fine, I'll do that. I'll do that. Predicting the R square.
We'll work on that part.
We'll see
Um,
how useful that is.
Okay. Basically, I'm going to work on just a mini presentation that that I could possibly do for the class. Whenever you're ready for that, if it's in the near future, if the timetable, let me know further out.
We're going on spring break, just so you know.
Yeah,
this
So
week,
next week is the university is closed
and we'll see what happens with this corona thing,
because they are contemplating that if there will be too many cases at the university, they will teach only online or something like that.
Right.
They're already freaking out.
Okay.
Supposedly
We have a lot of Chinese students here.
Yeah, and then we have Italy, and then they've already canceled all, semester abroads and all that stuff.
Right. Understand. I did the same thing. We canceled our China trip.
Yeah, right. That was a long time ago. You remember? It seems so ages ago. Right.
Okay.
Anything you're saying.
I'm going to be working on that, the work in progress for whenever the opportunity.
Yeah.
Let me ask you something. I'm going to put in the link.
And I'll send you our slides too, George.
When you look at the bar chart, it says that the barchart.com futures quote, they call it ES.
Right.
Is that related to what you are trading?
I do not trade the ES. I trade the NQ, the NASDAQ.
And no, I know, but you said you have another product for the S&P 500.
Yes, it is the ES that I'm also developing a product for. I haven't finished it because
He's working.
So now NASDAQ is your main focus.
Yeah, that's the one that's making my money, and that's the one that I'm actually.
Yeah, let's focus in on one thing at a time.
Right.
And then we'll see how it works there, and then we can try to test the other period.
Right.
Okay. So that will be NASDAQ futures.
E-mini futures. Yeah, NASDAQ E-mini futures. E is for electronic, and E is for the mini contract.
All right. Okay. All right. Thank you. So we'll touch base next time. In the meantime, let us know if there's anything is happening.
Okay. There's always stuff happening. I'll drop you a line.
Yeah. All right.
Okay.
Thank you.
All right. Okay.
Bye now.
Goodbye. Good to chat. Bye.
As usual.
Stay well. Bye.
Stay well.
Let me make some notes
Yeah,
before you take over. Okay, we can stay online for
No,
a
we
while.
have to
Oh,
sure.
yeah, Carlo, listen. Just let me finish a couple of things. So you can leave already. Let me just finish a couple of things.
You want to stop the recording now?
Just let me finish.